Hi everyone, hope you're doing well. Today we're going to do a full breakdown of Hims and Hers earnings, and I've got to say they were decent. I would give them a solid 8 out of 10. There was some really good positives in here. There was also a couple of negatives that I didn't like, so we'll cover them today. I just feel like with Hims and Hers, we are like the OG YouTube channel on Hims and Hers, so we've obviously been covering the stock since it were $3 back in 2022, and it's one that I think built like a really core subscriber audience here of you guys that follow me, and I feel like it's one that I still want to do the full earnings breakdown for you guys on the main YouTube channel. Obviously, I do quite a few of them now on the Patreon, but this is one that I always still want to keep public because I think it's one that well, Hims and Hers in general will help build me a lot of wealth with the returns that it's had, but also really help build the subscriber platform that I do have today on YouTube. So I do certainly owe quite a significant amount to this stock. Before we do get onto the earnings, I just want to point out Palantir. The stock is down 7% in pre-market, but when you look at the earnings, wow, really good beat on EPS. Revenue now growing at 62%. And also hiked up the guidance. So you might be there thinking, well, why is the stock going down? Well, you only have to look at the run that it's been on. I mean, year to date, the stock is up 175%, and I think in the last month, the stock is up 15%, so it's still up for this month. And, you know, when you are trading at 287 forward times earnings, you do have to do pretty decent, financials to command this sort of valuation. So it's just tough time for Palantir because they are at a very, very rich premium and such a good run up. So it's perfectly normal for the stock to give back after the run that it's been on, and also considering the valuation. So I wouldn't worry too much. But the thing that made me laugh is just thinking, has anyone seen Sasha? Has anybody seen how he's doing? I mean, God, the fact that you come on a YouTube channel and slag it off and say you're selling your position, and then from that point there, the stock then goes on to what? Return over 2,500%. I know we all make mistakes in the stock market, but there's mistakes and there's massive errors, like errors where you lose, the financial wealth that would have been built up from holding that position. Absolute stinker, that one. So, yeah. Zophams as well, a stock that I own, they did report earnings today. The stock is down about 12%. I'm actually relatively surprised, to be fair, because I actually thought the earnings were good. I don't know if it's just because they're having those tough comps and people looked at like the growth being slightly lower, but the tough comps, they've been calling it out all year, so there's no surprises there. So I thought that considering the tough comps, I thought the earnings were actually pretty decent, although I've not read the full report yet. But yeah, strange drop there. Anyway, let's go on to the stock that you guys all came on the video for, which was Hims and Hers. So what has been really interesting is the pre-market or the after-hours movement. I mean, I don't know if you saw the earnings when originally the stock came out. Trading 2 and 2 notifications were mental. It was like, we're down 5%, we're up 5%, we're down 5%. It was mental. Like, we had an original drop and then we had a bit of a decent rally up. Then it gave it all back and then it bounced up again. So we'll see where the stock eventually opens up at overall. Key thing I always want to point out with Hims and Hers is just don't forget the rally that we've been on. Like, we're up 76% year to date. That's pretty incredible, and in the last year up 113%. So don't get all sulky bums when the stock doesn't move anywhere or if it goes down slightly. It's still been an incredible year for Hims and Hers, which is really important to point out. Now, let's start with the EPS side of it. So there was a miss on the EPS, although the EPS, I don't know how comparable that actually was because there was a couple of one-time charges going in there, a tax benefit from last year. So yeah, I wouldn't really worry about that. Like, I've seen a few people going, well, why didn't the stock go down because of the EPS miss? And it's like, well, if you have to have a look at if you look at the numbers, you can kind of see why the stock has not really moved too much off the EPS. Although what I should have said actually before I started covering the Hims and Hers earnings is that this was a really interesting one because I think I said to you on yesterday's video, like, this is the first time that we go into an earnings and there's just a lot of things going on with Hims and Hers because you've got obviously the short interest. The shorts are piling in, which is incredible considering the financial projections that we've been going on. You have the tough GLP-1 comparisons kind of coming in as well. You have the growth rate. The growth rate that it is at decelerating, still growing really good rates, but we're going from 90% down into the 40% range. So how much is that going to upset shareholders? Because we've seen it before when stocks get in those sort of situations, people just pile in because of the hype of like, oh, look at the growth rate, and then it starts going down a little bit and like, oh, I'm selling this. It's only growing 40% now, which is ridiculous. So you got all of those kind of like factors being playing on Hims and Hers at the moment, and considering all those factors, I actually thought they were pretty good earnings. Like I said, revenue of 49% year-over-year growth, beat by 19%. So that's really good. Really good growth in that, revenue after the tough comps that they currently have. So I was really impressed by the growth overall, which is probably the key thing because they are still very much in. Sometimes people get spoiled with Hims and Hers with the levels of profitability they are doing for a company that's still growing at 50+% revenue growth. You normally expect a company like this to not show the levels of profitability that Hims and Hers does have, which puts you into the perspective of when the company matures. These guys still have international expansion in front of them. So imagine when they mature, the profitability levels they're going to do. So for the guide, were a bit soft on the guide, I've got to say that. So revenue guide of 2.3 billion, and that compares to where they were at for the full year previously in the last quarter, from 295 up to 335. So yeah, I guess it's at the higher end of the guide, but you get used to Hims and Hers beating. So actually, it's not as bad as what I actually thought there on the guide. EBITDA margins of 13 to 14% was in the last quarter, and they did guide that down to 30. I've got it somewhere, but I've lost where it's gone. 13% of EBITDA margins. So a little bit low on the EBITDA margins. You could say that the reason why is because there has been a few things that have kind of come up in the latest quarter. They have to take a couple of charges on, and that might be the reason why. There's a couple other reasons potentially I'll show you further down the line. So maybe a little bit lighter on the guide than what we've normally seen from Hims and Hers. But yeah, I've been really picky because we would. And I think this is the big case with Hims and Hers, is that we've gone from a time frame where we've got to remember, like before, we were just seeing absolute, ridiculous earnings from Hims and Hers, and now the numbers are catching up a little bit where they're not, doing them insane guides anymore. But you look at the context of the guide, and it's still very, very good growth overall, which I guess is the main thing, isn't it? So yeah. So subscribers growing at 21% year over year. So that was a bit slower than what we've seen previously, because I think previously we were coming off subscribers growing at 31%. So there's a bit of deceleration going on in the subscriber rate, which is something to watch out that doesn't continue to get worse. But still 21% is good. I'm happy with 21%. We just don't want to see that, next quarter it's 19, next quarter it's 17, because that's obviously a little bit of an issue. But like I said, you've got the GLP-1 comps at the moment, so wouldn't panic about it. It's just an orange flag just to keep an eye on that number overall. What was interesting, and I can't believe analysts did ask about this a little bit, but not into the detail that I would hope them to do, is the shock of discussions with Novo Nordisk. I was like, okay, this is going to be saying like, oh, we're after compensation. It wasn't. So he said, Hims and Hers and Novo Nordisk are in active discussions to make Wegovy injections and Novo Nordisk's oral Wegovy when FDA approved. So they are basically saying that they're now on about offering the Novo Nordisk injections and Wegovy back on the platform. What? Like, from what happened from those press releases a few months ago to where they're at right now, how has this happened? Like, I can't believe analysts were not asking, like, what? Like, I thought we were going for compensation, and now, like, you were on about doing another partnership. What's changed? So, I mean, if they do that, that'll be great, but, I mean, Novo Nordisk, they seem bipolar at the moment with what they're doing with these sort of things, and I don't know if Hims and Hers should, by spite, just be like, yeah, you know what, screw your partnership. We don't want it anymore. So that was a wild one that was going on there, and I'm surprised the stock didn't react positively just off that news, because I think if you're able to offer those injections and obviously the oral, if that gets FDA approved, that's a big thing for Hims and Hers. So yeah, that was, I was going to say good, but interesting is definitely a key word as well. So yeah, expenses. So granted, the company is going through a pretty decent investment phase, which is key, and I would expect the expenses to increase. Obviously, they made a lot of acquisitions. I just don't know if they've got to get it a little bit under control, especially if your revenue growth is slowing down. You look at operations and support, pretty decent increase. Technology and development, nearly double. G&A was up nearly double. A big increase in the expenses. So this is just something to kind of just make sure they get it a little bit under control at the moment. I can let them off at the moment because they have made a lot of big investments this year with acquisitions. But same again, just a bit of an amber one on that point of view there. Stock-based compensation, another amber one down there. Obviously, like I said, big acquisitions, big expansions, but it was a bit of an increase on the stock-based compensation there overall. Looking at the conference call, so they talked about the partnership they announced earlier with Marius, which will allow them for the FDA-approved oral testosterone treatments in 2026, which was again big expansion into multiple categories. We say this all the time with Hims and Hers, like people forget like the scratching the surface on the categories they're entering, and every time they enter these categories, you're talking multi-billion TAMs, and if they only take like 5% of those TAMs, imagine what benefit that's going to have. So obviously that's great, but nothing too much. They also made an investment into Grail, the company that is behind what is believed to be the most advanced multi-cancer early detection test on the market. So that's interesting. So we'll see what happens there with that point of view. They still outline that in 2030 they are expecting to get to 6.5 billion in revenue and 1.3 billion adjusted EBITDA. Same again, nothing new there, but it's good to see like they still expect to do that. And obviously 6.5 billion in revenue and 1.3 billion of EBITDA on the levels that they're at right now would be a really good performing share price, in my opinion, if they were able to achieve it. They did say they have reduced the prices in the GLP-1 treatments by 20%. So I wonder if that's why the EBITDA guide also went down, because obviously if you're charging less, you're going to make less profit. So I've seen a few people pointing out that the EBITDA guidance is because of some one-time charges, which is true, but also is it this factor, which would also make sense because the GLP-1's a significant amount of your business, and if you're charging less than 20% less, that's going to make a bit of a difference. So I once again, I'm surprised analysts didn't pick up on it. Like, why is that? Why are you doing that? Like, here, are you thinking that you can take more market share if you do that? Is it competition? What's the reason? So that was really interesting, and I didn't really see too many people pick up on what was going on there. So they talked about that. They said that they're finding the success in the US and the UK, which is key because obviously UK is a bit more of a recent expansion because of their acquisition of Zava. Basically means they are in a good position to expand internationally into Europe, Germany, France, Ireland, and Spain, which is good. Although they said that they are addressing more than 200 million markets across the regions, I would love, once again, analysts again, these guys get paid the big money and the questions they ask are just absolutely shocking. I'd love to see more detail, like, in this quarter of Zava, what was the growth of the company? What was the treatment expansion? Give us more details on it. What's going on there? You said that the success in the UK was good, and they talk about the members, which obviously sounds a big number, but give us a couple of financials. And same again, I always like to see like the analysts push on like out of the GLP-1 business, what all the parts of the business are growing if they break it down, and there just wasn't that. So that's a little bit of a analysts could have done a little bit better there. So next year they said they're planning on launching into Canada, which is great to see. That's a great area. That should be a really easy adopting market for them as well. So that should be good. They said that looking ahead, they see international markets as a powerful long-term growth opportunity, representing more than 1 billion in potential annual revenue. Which is great to see. They also talked about the UK and European markets as well. Big statement here. We believe Hims & Hers will soon become the largest global consumer health platform, unlocking access to direct-to-consumer personalised care. That's a big, the number one. It's a big statement, that. And overall, with Hims & Hers, there's a few things, like I said, like I pointed out to you, like amber flags, just to keep an eye on, like the subscriber growth, the expenses, the stock-based compensation. But as a business, as I say to you, when you're investing in companies, what do you want a company to do? When you look at the earnings, you want to see all the numbers going up in the right direction, profit going up, revenue going up, and that was it. Really good. And the fact that the shorts continue to pile on at this sort of valuation is incredible, to be fair. And then you look at what the company's doing. The growth drivers are clear. They're in the conference call for you. international growth, expanding the TAM into the US. It's good. This is why Hims and Hers is that there's a few. I've with Hims and Hers, my tone has calmed down a little bit with Hims and Hers in the last year because the days where Hims and Hers just did the ridiculous beats, they're not there anymore, and that's one key thing to remember. And the growth rate is coming down from the tough comps of the GLP-1. And I've said to you guys, like, I think a few people have got into this stock now that just expect the growth rate to go ballistic, and now they're hitting the harder comps. The growth rate's going to just come down a little bit. It's still going to be exceptional, but going to come down a little bit. And there's a lot of hype investors in here, and I think it's just going to stabilise. You look at the valuation. I saw a few people calling Hims and Hers cheap, and I don't exactly agree with the term cheap. Because when you're paying 55 times forward earnings for the next year for this company, it's fair in my opinion. And I think that Hims and Hers does need a 6-12 months time frame where it just, the share price just stays stagnant and just lets the growth catch up a little bit, and then we go on the run. Because when you look at, that's like in the short term, like 12-24 months. When you look at the long term and you listen to the conference call, you can see here, like, this is why I still hold most of my shares, because when we see the statement from Andrew Dunham about, it coming the largest global consumer health platform, I believe it. There's a good chance. And even if it doesn't get the largest, it's going to be one of the largest. And it's all laid out for you, like the international expansion, especially into the Canada sort of area. You look at the TAM opportunities here. Obviously, if they get a partnership with Novo, I think that's probably really good for them, to be fair, which I'm still surprised I'm saying that after what's gone on in the last few months. But it's all there. So all they have to do, and when you look at Hims and Hers, and the management team there, you would believe him. You look at the execution, that this was a company only founded, in 2017, and we're talking about a company now that's a 10 billion market cap. Are they going to probably achieve these big levels? I think so. And you would bet on this management team to do it. And it's there, it's laid out for you. The plan's there, they just have to go deliver now. And I think they will do. And if they do hit these, this plan, and they do hit the financial guide, Hims and Hers, in my opinion, in the next 5 years will be a $100 stock. So I will hold the majority of my shares because of that reason. And when I look at the numbers here, I put 15, 20, 25% revenue growth, which that's for 2029, which leads them a little bit short of the 2020-30 targets. 8, 10, 12% profit margins, which if they're trying to achieve like 20% EBITDA margins, I think those profit margins are fairly achievable, even slightly conservative potentially. And I put 40 times earnings in. I think that's fair for a company growing at these levels and these profit margins. And on the low side, 31%, on the mid side, 93%, and on the high side, 173%. So I will continue to hold my Hims and Hers shares. And the fact is that, I wouldn't, if Hims and Hers would drop in the short term, that'd be great, because if you put Hims and Hers down another 20%, I'd actually probably actively come another buyer of Hims and Hers at the moment, to be fair. So, I will buy if it gets to those sort of levels. I just think in the short term, there's, like I said, with the pressure of the shorts, a lot of hype investors jumping in, I think that could create a short term, and the revenue growth slowing down, I think that could create an opportunity for Hims and Hers to come and buy again. But the long term still looks very good for it overall. Just to point out that Hims and Hers in the conference call did get asked about, I said on Monday, like, one thing to watch is the 2026 guide. They did get asked about the 2026 guide, and they said that, it's too early to guide for that, so they didn't do it this time round. But the key thing is where they're at in going forward in 2026, because if we just have a quick look at the analyst expectations actually here before I end the video, they look pretty conservative, like a decent jump in the EPS side of it, which does seem achievable. And if you look at the growth rates of 19%, it looks a pretty good setup. So yeah, I think that Hims and Hers, it just needs to stay flatlined for a couple of months, let all these hype investors come out, and then I think if they execute on what they're going to do in 2026, and obviously the tough comps from all this GLP-1 stuff from last year, I think by the time we get into back in of the middle of 2026, and they are financially executing, I think that's when the stock goes up. So don't forget, that's what I say, is like, just don't forget where Hims and Hers has come from. Don't forget the rally that it's been on overall. And I think it is a time where it just we've been a bit stagnant since May time, and I think that will continue on for a little bit, and I think it'd be good for it to continue a little bit, and then they execute, and I think we start pushing again higher. And I think we talk about Hims and Hers being $100 stock in the in the next few years for sure. So good report. Yeah, like I said, 8 out of 10. Good information, good execution, good growth. Few amber flags to watch out for, and that's why I put the score down slightly, but happy shareholder overall. So hope it was useful. See you in a bit.